Good afternoon, everybody. We will begin this session in a couple of minutes.
In a bike, tape cutter.
I think we should start now. So let's start. Good afternoon once again, and welcome to all of you on in this next Bazar, another Bazar pe Charcha session. And before starting, this is disclaimer from our side that we are going to discuss a lot of stocks, index, and lot of talk about markets. But please do not consider it as any form of buy or sell recommendation. Please consider it as an example purpose or educational purpose only. Okay, and we are not having any direct or indirect exposure in market. So this is the current market scenario as per O'Neill methodology of market direction. And as per O'Neill methodology of market direction, you can see that almost all overall market except IT and energy and auto are in rally attempt mode. Rally attempt means after correction. Now we are waiting for follow through day. Once we will get follow through day means any particular day when the market will gain more than 1.7% with higher volume to previous day, then we will move into rally mode, means confirmed uptrend mode, unless and until it will remain in rally attempt only. But at the same time, IT, a major sectoral index, energy, another major sectoral index, and auto third major sectoral index is in rally clear cut uptrend or rally attempt as per one methodology. And overall market plans, if you see what is the return of last 3 months. So except FMCG, all market has given negative return only last 3 months. And if you check like last 12 months from last 6 months, so there are also like negative return. So I can say that the market is about underperforming, or market is giving from the last 6 to 9 months, market is continuously giving month on month and quarter on quarter basis negative return only, with some certain exceptions. Of course, it is there, like FMCG. The FMCG has not, in last 3 months, if you talk about FMCG, has given only 5% positive return, and it is only because of the generally it is a general observation that FMCG or this considered as a FMCG sector index is considered as a defensive sector during falling market, because we are not going to eat we are not going to stay eating and everything, and because of that FMCG. And another major advantage in the hand of FMCG, so they can pass out their cost to consumers, and that is why FMCG is not comparatively on comparative basis is doing good actually. And now further, auto is another sector. It is clearly showing resilience in downfalling market. And tomorrow, now today is the last day of this quarter as well as the last day of this month. So tomorrow this auto numbers will be there, and after that we will decide what market will decide how that this particular space is going to behave. Okay. So for further discussion, let's move on chart so we can elaborate in better way. So let's start with Nifty 50. So see, Nifty 50, if someone is there with us from the last November onward, and from the last 7-8 months, so if someone is remember that we are consistently saying that market is in downtrend. And see here, if you check the overall placement of market, so market is in downtrend only, like lower top lower bottom formation, this like this, and market is still in down. So means lower top lower bottom formation. Lower top lower bottom formation means top is lower compared to previous top. This is compared to this is the previous top. Compared to this is the previous top. And like compared to this is the previous bottom, and compared to this is the previous bottom. So I can say that as per this as per Dow theory, this is a presumptions of Dow theory. Dow theory is that the market is forming lower top lower bottom formation, so it is in correction mode. And that is, and another way, if the market is consistently forming higher top higher bottom formation, the market is in uptrend. So I can say that the market is still in correction mode only as per Dow theory. Further, as per O'Neill methodology also, we are waiting for follow through days. For another thing is that if I talk about key moving averages point of view, so this market is trending, say here, market is trending below all key moving averages, all, be it 200 days exponential moving average, simple moving average, 50, 100, 21, all key moving average. And now from the last 1 week, one observation is there, market is facing resistance around this level of 21 days exponential moving average or 21 days moving average. Because of this, that level is placed around 15,500. So I can say that unless and until market is trending below 15,900, I can say that it is quite negative, or it will remain trended in sideways with negative bias from short-term perspective. Okay, but once it will cross, let me draw a trend line for you, then I can explain you in better way. Once it will cross, see, this is the range. So this particular range, I can say that it is placed in the 21 days exponential moving average, that as well as this downward sloping trend line. Once it will cross this 15,900, I can say that market is ready to move toward at least this particular level. Okay, and that particular level is placed around 16,800 kind of levels. So I can say that once it will cross and hold above 15,900, some 5-6%, 7% rally may happen in market, unless and until it will remain traded in sideways with negative bias. Okay, so this is the current placement of Nifty 50. If I talk about further on a little bit longer time frame point of view, so there is an analysis of, let me open this weekly chart for you. Then I can say that how it is placed from the longer term perspective. Okay, so I am changing this chart on weekly chart. So on weekly chart also see it is forming lower top, lower bottom formation. Still it is there. Another thing is that this is this particular area here, June 21 area, and June 21 area is a very good consolidation area. And if I say last 1 year anchor point, so anchor point is also placed. Anchor point is a level where market has traded for maximum number of days in any particular time frame period. So if I do the anchoring of market in last 12-month time period, on last 52-week time period to be precise, so I can say that this 15,700, 15,600 is the anchor point level. I can say that the 15,500 to 16,000 kind of level, and that is why most probably, in my opinion, market is facing resistance in upper band of anchor point that is placed around 15,900, and lower band taking support around lower band of anchor point that is 15,300 kind of level. So unless and until it will remain traded in that particular range, I can say that it will remain traded in sideways, and either side breakout, I can say that may lead this market in upside. But suppose, let's take an example. I suppose if it will breach or not, sorry, it has given breakout in upside, means it has given breakout above 15,900, 16,000. Then what should be what would be the course of action of markets? So most probably I can say that after considering a lot of macro data and current market scenario, it will not turn into clear-cut bullish trend, but yes, for some sort of bullish trend may start in market, at least from short to mid-term perspective, or some bounce back kind of perspective. And in such case, market may move toward at least 16,800 or kind of levels in coming weeks. But for that, it must cross and hold 15,900. Then only it is ready to give rally of 5-6%. Otherwise, not. And likewise, suppose it will be 15,300, then I can say that the next target would be 14,800 in downside, then 14,200, 300. That is 38% retracement level of entire rally, 38.2% of Fibonacci retracement of entire rally from the low of 2020 to high of 2022. That is 7,500 in downside and 18,600, and 38.2% retracement is placed around, I think, 14,200, 300 kind of level. So in such case, market may slip. So that is why I am saying slowly and gradually market may move toward 14,000 kind of levels, and for that maybe beyond that also, but current scenario suggests that slowly and gradually market will ready to move toward. But for that, if I talk about next 2 week point of view, so I have suggested the level that 15,900 in upside and 15,300 kind of level in downturn. Once it will breach 15,300, then I can say that 14,900, 800, and then maybe toward 14,000 also market may slip. Okay, and once it will give breakout above 15,900 and sustainable trading about 15,900, I can say that 16,800 kind of level may be achievable in coming weeks actually. So this is the current placement as per my opinion of Nifty. Now let's move toward Bank Nifty. Nifty Bank. So see, current placement of Bank Nifty is also below all key moving averages. Okay, it is, if Bank Nifty is also trending above below all key moving averages, it is also not doing that much good. Its structure is quite negative. That lower top, lower bottom formation over here. See this top compared to this top, compared to this top, likewise. So, but at the same time, I can say that after analyzing last 15-16 month data, last almost 15-month data, I can say that this level of 32,000 is a very crucial level in Bank Nifty. Unless and until it is trending about 32,000 or holding about 32,000, I can say that it will try to bounce back from 32,000 until it is holding about 32,000. Once it will, like here also, it approached to 32,000 and there was a bounce back rally. Here also 33,000 it had. This time also it approached to around 32,000 and there is a bounce back. So that is why I am saying 32,000 is a critical level. Once it will breach, then only I can say that it may fall to 29,000. Otherwise, bounce back may be there. So 32,000 is a critical level in Bank Nifty. Once it will breach, then I can say that 30,000 to 29,000 levels can be achievable. Otherwise, it may give some bounce back in upside. But overall structure is negative, no doubt at all. Trending below all key moving averages. If I change this chart on weekly time frame chart, So that is also suggesting like negative pattern also. Even momentum is also suggesting some negativity. Momentum analysis RS negative bias only, but some bounce back cannot be denied. Okay, but meanwhile it is placed around 33,200, 33,400 kind of level, but major support is placed around 32,000. Below 32,000 target would be 30 to 29,000, and once it will cross and hold 34,000, so some more bounce back may happen in bank nifty. And meanwhile, if I talk about next 1 or 2 week point of view, it is in sideways zone only. And maybe one more thing that I want to discuss with you, and it applies to all sectors, including Nifty and overall market. Now, today is the last day of Q1. Now, most probably second week of this month, maybe toward 8 or 9 or 10 onward, this all companies are going to publish its Q1 data, Q1 earnings. And after that, most probably what I'm thinking, this market would get next leg of trigger from that Q1 data, and market will behave accordingly. And that is why I'm expecting next 15 days or next 2 to 4 weeks, actually. Next 2 to 4 weeks means I can say that the July month is a very crucial for market. That will decide market overall trend of the market. Either it will remain sideways, either it will fall further from here, or either it will give breakout. But at the same time, whenever I am talking breakout, that does not mean that it will give bullish, clear-cut bull trend breakout. I'm not that much convinced, but we need to wait and watch what is from a Q1 earning data front, and after that we can say that how market is going to behave. But in my opinion, what I'm expecting, Q1 data would not be that much attractive, and maybe there would be some mixed picture, mixed numbers from Q1 data, Q1 corporate data, and that will decide overall market trend. And then next to next month, other lot of events are there, but that is the later part discussion. But earning this time, earning would be the key driver of overall market, and let's see how it is going to be, how companies are going to publish its Q1 data. In my opinion, data would not be that much attractive. To be in one line statement, why I am expecting some mixed kind of data and not that much attractive data, and that is why market will remain traded in volatile. Someday, one fine morning you will find some gap up opening, and one fine morning you will find a gap down opening, and it will remain traded in that. And technicals are also suggesting in that way only. Okay, so I have discussed Nifty and Bank Nifty. Now let's move toward another major sectoral index, that is Nifty IT. So Nifty IT, another falling indicator or sharp fallen indicator in last 6 months, especially after April onward. Actually, fall was started from here, from January, but there was some very good bounce back after approaching 200 DMA. And then it has reached once again 200 DMA around this level, and after there was sharp downfall. Okay, and market has approached to 26,000 level, and before this correction started, it has gained up to 39,000 or 39,400, 39,500. So top was placed around 39,466. So I can say that from 39,400 to 26,400 here. So I can say that almost 13,000 points fall happened in this IT index only in the time span of 6 months, even less than 6 months, I can say. So, and why it was happened? Because of recessionary economic expectation in USA, and that is why market was expecting that this IT, even though rupee are depreciating, which is quite beneficial for this IT sector, but because of recessionary situation or recessionary economic expectation in US market or global market, because of inflation and other factors, this sector is falling this sector has fallen tremendously, and still it is forming lower top lower bottom formation with on all time frame chart, be it weekly, be it monthly, or be it daily. So I can say that this is also not looking that much attractive. Today also, even last 2-3 days also, it is attacking some resistance around 21 days exponential moving average or 21 days EMA, and acting in sideways only. So overall, see, overall structure is negative, but yes, some bounce back cannot be denied, because in last 6 months it has fallen almost 25% kind of, from 39 to, you can find percentage from 29 to 39 to 36,000. So almost 33% correction has happened. So after such type of steep correction, I can say that some bounce back cannot be denied. So maybe, but maybe it would get triggered from this earning from this IT giants like Infosys and TCS, that would be due in next week, and afterward then some bounce back cannot be denied. But I'm not expecting so easy turnout in this particular. Easy turnout means it is not going to turn bullish in near term actually, so much bullish or trend changing bullish. But yes, some bounce back cannot be denied in this particular space also. But for that, we need to wait and watch for this IT earnings, at least from IT, at least two companies, two, three companies, or two top major companies, that Infosys, TCS, and Wipro, and other one or two companies. Okay, so this is also looking another laggard sector in our Indian market. Now, another sector is, let me discuss another sector, that is 1 minute. Let's take auto, Nifty auto. So auto on the verge of fresh breakout. Okay, but today, as I said to you, today is the last day of this Q1 as well as June month. Tomorrow, this auto companies will publish in monthly data, and after that it will decide the further trend in market. But technically, it is looking very much attractive, to be frankly speaking. I mean, we have in this week only we have updated to this our client also, and we have we have shared our views on social media about this auto index. So it is looking it on the, it is on the verge of breakout. Even it is if someone is following leading leading indicator suggests that it has given breakout. Okay, leading technical indicators is already suggesting that it has already given breakout. So but to get more confirmation, we are waiting for at least monthly data. But and technically, one more thing, that once it will cross 12,000 kind of level and remain holding about 12,000 levels point of view, I can say that window is open for 15,000 kind of levels. And in such case, and I am saying this statement from the last so many months, but it always failed to cross and hold that 12,000 level. And because maybe most probably maybe this time it will cross 12,000 kind of level and remain holding about that 12,000 kind of level. And in such case, it is going to be, even last 6 months also it is outperforming sector, and in such case it will remain outperforming sector in coming months as well. And in such case, stocks like Mahindra and Mahindra, stocks like TVS Motor, stocks like Maruti may really do well in this particular space. But for that, we need one or two more confirmation. And confirmation is, one is that tomorrow data sales number, and another is it must cross and hold about technically 12,000 kind of level. So it is looking attractive, no doubt at all. Okay. Now my hand Tisha is there.
Yeah. So thank you, Pawan. So let me take a few sectors. So let me share my screen. So I'll be discussing 3-4 sectors like Realty, Pharma, and FMCG, like what happened last month and what it's going to be in the next month. So in the last month, the Nifty Realty has been lost around 6%. So it was from last, if you see from last 6-7 months, it's continuously trading in negative zone. Like it's trading with a negative bias in the monthly time frame, and also weekly time frame. It's trading in a broader range, broader channel. So in the earlier episode, what we have discussed it somewhere around 30th May, like 30th May as well as mid of June. We have again we are saying that this level, that is around 370 level for Nifty Realty, is a major support level. So like what last week also, it has couple of times it has tested its that level 370 level and again given a bounce back. So let us move on to daily chart so we can see clearly. So from last week, it has tested that 370 level. So For coming week also, this 370 level will be the crucial level for Nifty Realty. So until then, it is going to be trading in a negative, trading sideways with negative bias. So if there is a bounce back, then we might expect something around 400, 410 kind of levels in coming weeks. So once it breaks below 370, so another 10%, 15% kind of correction we might expect in Nifty Realty. Okay, so until then, it might trade with the negative bias, and sideways trend may continue in this Nifty Realty. And let's move on to Nifty Pharma. So Nifty Pharma also last 6-7 months, it's trading in a channel, downward sloping parallel channel. It's trading in this range, and if you observe in the weekly chart, it has given it has given touched its channel low, and again once again it given a bounce back in the last week. If you observe the pharma stocks like Oro Pharma, Lupin and Star, these are stocks are bouncing from the lower level, which is gaining pharma which is contributed for smart pharma space. Okay, so also it has given a very good bounce back from its 200 EMA. If you put a 200 EMA, then it's somewhere it plays around 11,800. So it is now trading in a very good bounce back given from here. So what we can expect is this level, 11,000, 11,600, 700 will be the key support level for Nifty Pharma. So until then, it might trade in this sideways range with negative bias. So if there is some bounce back from we might expect something around 13,300 level in the coming weeks. So once again, this 11,800 will be if it broken below 11,800, then once again 11,000 will be the next target for Nifty Pharma. Okay, so until then it is trading in a sideways range with negative bias. And on the FMCG, FMCG has been trading in a consolidation zone. So last month also it's something it's trading made a similar kind of pattern, candlestick pattern, kind of hammer pattern on the last month, and this month also it's trading in that range. So on the weekly chart also it's trading in a very tight consolidation zone. So this is this level, this is a zone, something around 35,500 to 35,800, 900 levels will be continue to act as support for Nifty FMCG. Okay, so until it's trading within this range, it will trade in sideways. So once it given a nice proper sustainable trading of 38,500 level. So once it sustainable trades above 38,500 level, we might expect 40,000, 41,000 levels in coming weeks. But until then, it is continue to trade in sideways with kind of mixed bias from Nifty FMCG. So this will continue as a act as support level for Nifty FMCG. And let's quickly move on to Nifty Energy. So this sector even despite like last, if you see from this fall has been started recently from last 2 months, like from after April, May, June, especially in the last 2 months. So it has given a very good breakdown here, and however it managed to hold this 50-week moving average, and given a nice proper this week it has given a nice bounce back. But this is a crucial resistance level for one second. Okay, this is a crucial resistance for Nifty Energy, this zone. Okay, so this is also RSI and momentum indicators are suggesting sideways kind of range for Nifty Energy. So once it breaks above this 15,600, we might expect something around 27,600 kind of level in Nifty Energy. First target will be there will be a 50 DMA, that is 26,000 level. So that will be the crucial level for Nifty energy. So it might face some this level, this zone might face some resistance for some time and may give a bounce back. So until then, it's trading above this 23,000, 23,300 for 23,300. It will continue to act as a sideways trend. Okay, so this is regarding Nifty energy. So I'm again handing it over to Pawan for discussing the broader market. So it's so Pawan, can you share the screen or should I share the screen?
No, I will share it.
Okay.
So let me share my screen once more. Is it visible now?
Yes.
Thank you. So let's I think Nifty metal is still pending. Huh?
Nifty metal.
Yeah, Nifty metal is pending.
Yeah.
Yeah, Nifty metal is another sector which market has hammered in last 6 months, especially from the level of almost 6,800 to 4,000 kind of level. So more than 40% of correction happened. And major reason is that this global problem, especially from geopolitical, then inflation. And now one more thing that I want to share with you, that because this is the commodity sector, metal is considered as a commodity, international commodity. But and this commodity sectors are not doing good from the last 6-8 months in international market, and that is why it has fallen sharply from the level of 6,800 to up to almost 4,200 kind of 45, 4,600 kind of levels. And the structure is still bearish, I can say, and consistently showing lower top, lower bottom formation. Now I want to share one with this weekly chart or monthly chart. So this is the weekly chart, and if I take this Fibonacci retracement of this entire rally, which was happened in this from the low of 2022, high of this, so almost 38.2% correction level has already happened, which is flashed around 4,700. Now what next? Actually, I'm expecting at least 50% retracement kind of correction, and in worst case it may happen, it may fall up to 61.8% kind of correction also of entire rally. And if I suppose, if I to be remain on conservative side, if I expect at least 50% retracement level, then in such case 4,100 kind of levels may be achievable. So that is why I'm expecting 41,000 to 4,100 to 4,000 kind of levels may be achievable in downside in this. But it obviously it is not going to be in a linear manner, and it may bounce back from here from short-term perspective. So it may give some bounce back, like from the last few trading session, it is showing some positivity. But at the same time, if I talk about moving average and everything, so from moving average point of view, see, this is trending above all key moving averages. Even it is far below this 21 DMA also. 21 DMA is placed around 4,900. So that is why I can say that it may bounce back from here. Bounce back cannot be denied, but overall structure is varies in this also, and slowly and gradually it may move toward 4,000 kind of levels in coming few months. Okay, because I'm not expecting turnout in this space for at least next 4 to 6 quarter point of view. So next 4 to 6 quarter, that means by the end of almost 2023, and that is why the structure would remain negative in this. Most probably it would remain negative, and gradually it will move toward 4,000, and in worst case scenario it may hit toward 3,500 kind of levels also. Okay, but please do not give more weightage on 3,500. One can expect at least 4,100 to 4,000 kind of levels. But at the same time, in between these things, some bounce back cannot be denied. Bounce back may happen, and I'm expecting at least 5,000 kind of bounce back may happen in near term also. So bounce back may be there, but overall structure is negative. It may fall further from here from the next few months perspective or next few quarters perspective. Okay, now today I have decided to, because today only we are going to complete first half of this calendar year 2022. That is June because today is 30th June, and that is why I have decided to let's discuss some broader market index. And first broader market index is Nifty 500. Okay, so let's talk about Nifty NSE 500. Let me open first. Nifty 500. Yeah, Tisha, do you know the code of Nifty 500?
Just try CNX 500.
CNX 500.
Yeah.
CNX 500. So see, this is NSE 500 chart, daily chart. If I talk about this chart, so see, this is already trending above all key moving averages, and slope of key moving averages is now tilting in downward trajectory. Okay, with this downward slope actually. If I talk about 100 days moving average, 50 days moving average, slope is already downward sloping. If I talk about this black line, which is 200 days exponential moving average, so its trend is also, its slope is also bending in downward slope. So that is why I can say that it is in bullish trend. Further, bearish trend. Further, it is consistently forming lower top, lower bottom, top, second lower top, third lower top, fourth lower top, and like that. So and likewise, first lower bottom, second lower bottom, third lower bottom, fourth lower bottom. So I can say that it is trending in lower top, lower bottom formation, and it may remain traded in correction mode only. And now, if I talk about little bit mid to long term perspective, so let's open a weekly chart. So weekly chart is saying that, see that it may fall further from here toward at least, I am saying that 12,500. Currently it is placed around 30,400 kind of levels, and maybe it may fall 12,500 to 12,000 kind of levels. Further, one more thing, if I try to find this Fibonacci retracement of this entire rally from the low of 2020 to this. So Fibonacci retracement is also 38.2%. Fibonacci retracement is also placed around in the range of 12,000. So I can say that gradually this particular broader index may fall toward that level, that is 12,000. So meanwhile, prima facie, I can say that from in next few weeks and next few months, maybe by the end of this calendar year, most probably, or maybe prior to that also, it may fall toward 12,000 levels. At least I can say this particular statement with confidence at current juncture. So it may fall further from here, but at the same time, if I talk about next 1 week or next 2 week or next 1 to 4 week point of view, so some bounce back cannot be denied, but structure looks negative. If momentum analysis, RSI analysis, MACD analysis on monthly chart also suggests that, so it will remain like in that range or in continuation of current trend. And in such case, first level is that this level, that around 12,000 level. Okay. Now next, if I talk about Nifty next 50, so CNX next Nifty next. Do you know the code of next 50?
No, let me try.
Nifty Junior. No.
Yeah, just try next 50. Nifty next 50.
Next 50. Okay. Nifty next 50. So see, Nifty next 50. Once again, it is trending inside lower top, lower bottom formation, trending with all key moving averages. So it is also showing some negative bias. Some bounce back cannot be denied. It is still trending below this exponential 21 days moving average. So some bounce back may happen. Means in case of bounce back, it may move toward 39,000 kind of level, and give some very good bounce back in this in Nifty Junior. But at the same time, if I talk about little bit longer term perspective, so in such case also, I can say that it may fall at least this particular range, and that particular range is placed around at least 34,000 kind of level. Same time, if I do Fibonacci retracement, if I try to find Fibonacci retracement, so 38.2% retracement is also placed around 38. It has already retested to 38.2% retracement, and which is placed around this level of 35,000. And that is why after touching 35,000, it has given some bounce back from here. Okay, so I can say that now from this level 35,000 and then 34,000 or 34,000, so maybe remain a crucial level. So 34, so I can say that unless and until it is trending about, there is a 1,000 point range, and that range is 34,000 to 35,000. Unless and until it is trending about that level, it may remain traded in sideways only. Once it will breach that particular level, in such case I can say that 32,000 levels can be achievable, but at current juncture there is no sign of any further downfall in this. But yes, it will remain traded in sideways only. Most probably next 3 to 6 months it may remain trading in this particular range, and it is not going to give up this level of 34,000, so 35,000 so much easily. So most probably it may from next 3 month perspective or next 3 to 6 month perspective, I can say that it will remain traded in between 34,000 downside and 37,000 upside, and it will remain traded in the range of 37,000 or 37,500 in upside and 34,000 kind of levels in downside from at least next 3 to 6 month perspective. So sorry, so it shows some bounce, some sideways kind of trades in coming weeks and months with negative bias, obviously with not positive bias, with negative bias only. Okay, now let's take one more, that is Nifty.
Just try free float.
Free float, okay. Free float 100. Okay. So the structure of this Nifty Midcap 100 is also negative, and so giving showing some negative bias, with negative bias only, with lower top lower bottom formation. Okay, so correction is there in this broader market also, and likewise it has breached a previous low, and which was a crucial level of 26,600 level, and after that it has fallen to 25,000 kind of level, but once again it has approached the 26,600. So I can say that some more bounce back cannot be denied in that, and maybe it may bounce back to a 28,000 kind of levels, but it may remain traded with negative bias only from coming few weeks and months perspective, and slowly and gradually it may fall further from here. So but some bounce back cannot be denied. I am expecting that it may fall to our 24,000 to 23,000 kind of levels in coming few weeks and months. But meanwhile, it looks like that it may most probably it may remain traded in this particular range, and that range is around 28,000 in upside and 24,000 kind of levels in downside. Further, one more, if I calculate or take this Fibonacci retracement of this sectoral index, so then also this 24,600, I can say 24,500 kind of levels is a crucial level, because it is a 38.2% retracement. So that is why I am expecting it may remain traded in this particular range, and that range is 28,000 in upside and 25,000 plus minus 500% in downside. So most probably in next 2-3 months it will remain traded in this particular zone only, and so with negative bias obviously, and that is why its impact on overall market may remain quite negative, because this is the overall representative of overall market. So it is also not looking that much attractive. It may remain, but that does not mean that you will not find some positive stuff, some positive or good bullish stock may be there in overall market. But yes, overall majority of the stocks may remain in lackluster kind of trend money. Okay, so I think I have discussed almost all major index. Only one small cap 100 is there. Yatisa, can you take small cap 100?
Yeah, let me take.
Move to query session.
Okay. So Nifty, this is a 1 second. Let me go with the broader market. So small cap has been also failed to hold this 2018 high. So on the monthly chart, so this is a key level, one of the support level on the monthly chart, that is around 9,000 level. So it has failed to hold that level. It has tested couple of times, and finally it fell in the last month and this month. Okay, so on the weekly chart, so this is currently trading in a negative bias, this sector also. So it's continuously forming a lower high, lower low pattern, and again it has bounced back from this level and formed a bullish pin bar hammer kind of pattern in the last week. So we might, this is a level. So if I mark an horizontal line over here. So this is a crucial level for Nifty small cap. That is around 7,800 and 7,850 level. So this is a zone, critical zone for Nifty small cap index. So once it has given once again it is given a bounce back from this level. So it will continue to act as it trade in sideways with negative bias. So once it breaks below this level, the next major support is around 7,200. That is 200 DMA moving average. So uh, sorry, 200 week moving average. So that is a level. So this also in the coming few next couple of 3 weeks, 3 months perspective, it will continue to trade within this broader zone of 9,000 to 7,000 kind of level. Okay, so let us move on to query. So let me take the chat. Okay, so there are queries regarding sector rotation quadrant. So we can't show it here. So let us take that question.
We will try to incorporate this from
Sector rotation quadrant, yes.
We will try it from next week. Next Bazar pe Charcha.
And next query is regarding defense stocks, BDL, BL, and HL. So let us.
Stock is looking quite attractive actually.
Yes.
And I would say even last Bazar pe Charcha also, and I have shared my opinion regarding this defense stock. My opinion regarding all these stocks, and I am always suggesting that meanwhile it is in correction only, but I would suggest to buy on dip, follow buy on dip strategy. Especially there are few stocks like Hindustan Aeronautics, selective buying in this BEL, then this Cochin Shipyard. All this is looking quite attractive. So I would suggest whenever there is some bounce back happen in this particular stock, some bottom fishing interested, so one can start thinking. But at least not meanwhile from short-term perspective, but yes, it is a leading quadrant stock. All this HAL and other defense stock, and most probably in the next few quarters it will remain in leading quadrant only. So I would suggest follow buy on dip strategy in this particular space. So now there is a question, sir. Everything is looking gloomy. Please show something positive to cheer us up. See, we are not here to cheer up. Actually, we are here to share our opinion about market, whatever we are what we are trying to analyze. After doing a lot of hard work or analyzing a lot of data, like macro data, fundamental data, and technical data. So obviously we are last year, like we are very much bullish market, because actually we are not bullish because market was bullish. That's why we are saying our bullish opinion. Now market is showing some negativities. That is why we are sharing our negative opinion. It is not like that we are sharing from our pocket actually, and we are not here for entertainment purpose. We are here only for sharing our genuine opinion to you and to all of our subscribers. And once market will turn positive, obviously be patient, Rajji. Once market will turn positive, definitely we will turn our opinion positive. But we are also wishing that market will turn, this gloomy kind of situation will end very soon. But at least in my opinion, it is not looks like it will take at least another 2-3 quarters, at least 2 quarters actually. At least by the end of this calendar year, picture would be more clear, because some more rate hike is due from Federal Reserve as well as from RBI perspective. And because of that, this in current inflation may accelerate further. And because of that, we need more time. Market also need more time. And then that is why we also need more time to give some rosy picture. But meanwhile, we have whatever we have shared that we are trying to find out after doing a lot of analysis actually. But be patient. Of course, one day market will turn positive. मार्केट कहीं नहीं जाएगा, मार्केट ऐसे ही रहने वाला है. लाइक इन 2020 एवरीवन वाज सेइंग जस्ट सेल कर दो और भाग जाओ, बट इट वाज लाइक जैसे फॉल आया ऐसे उतनी स्पीड से ऊपर भी आया था. So this time also market will turn, but maybe this time it will take little bit longer time. I'm not saying no for that. Yes, this time it will take little bit longer time. Maybe from the last 7-8 months we are consistently falling. Maybe it will take another 3-4 months, 5 months, 6 months, but some fine morning things will turn positive and market will also turn positive. So don't worry, just stay tuned with us. We always try to share our opinion, genuine opinion with you actually. Thank you.
Okay,
and
so
now
let's move on to next query that is same from a defensive space, BEL. So BEL, Bharat Electronics. So it's currently trading in this symmetrical triangle formation. So its volatility contraction is happening right now. So once it breaks out about this 240-246 level, we can expect some again that upside rally will continue. So this is this trend line is down from the downside. This is a crucial support level for Nifty BL. So until then, it's currently trading in the sideways range. So better to wait for this confirmation on the either side. So this is a bit tricky where we have to hold, or if you're holding this stock, keep this level for the on the either side, like 246 on the upside, and on the downside it is 225 kind of level on the downside. Okay, the next question is HAL. Okay, so HL is also trading. I think it's trading in a zone, this zone. So this parallel channel it's trading. So it's currently trading in from last 2-3 weeks. From this week, I guess from 20th June, it's trading kind of volatile. And currently is trending sideways. So once it might test once again 1700 730 level. So this moving average 50 DMA also plays around that level. So it might test that level and might give a bounce back from there, which it might give a target of around 2000 level. Okay, breaking below this level, so once again it might test 1500 level. So on the HL. So next one is Timken. So Timken has given a very good breakout on mid of June. So this level, it is given a gap up opening and raised from that level, and once again it has retested that level, this breakout level, and again bounce back. So currently it's trading in the sideways range. So it's better not to take a fresh position over here. Okay, so once again, if it retests this level, you might see. Okay, also there is a small breakout here. If you consider from an trend line from a high of this to here, there is a small trend line breakout. So if you are kind of a small investor, one can go with this buy over here and keep a stop loss of 2250 and ride this rally. But the momentum indicator has already moved to sideways. So so this is on the Timken India. So if you are holding this stock, continue to hold this stock with the stop loss of 2250 kind of level. Okay. Then so
one question I would like to take here this. Apart, Sarma is asking about would you suggest some stocks to monitor? So I would suggest one auto sector index, okay, because it is about on the verge of breakout. First, another is that you can find out various stocks. which are trending above trending above at least 50 50 and 100 and 200 DMA, means key moving averages, about 200 key moving averages, and you can start tracking that. And if there is some opportunity, you can start finding. Few stock I would like to say, like PVR is looking good. Another stock that SKF India, like Timken India, just Tisa was discussing. So SKF India is looking good. Then PVR is looking good. ITC is looking good. Auto, various auto stocks is trending, like a TVS Motor, Mahindra and Mahindra is trending at all-time high. So auto space stocks are looking good. So you can track all these stocks. And so many more stocks are there. You can find out from our tool also, that MarketSmith India, and from that you can sort out the stocks, and you can start tracking that stock. Another thing is that you can start tracking those stocks which are showing relative strength analysis, which are showing great relative strength chart on daily chart or weekly chart. So you can start tracking that. But I have given some hint. You can start preparing your watch list as per given opinion over here. Just I have shared with you. One more thing that I would like to share, sir. Yeah, I am following Pawanji for last one, but most of that will call me market top in October last year. Please thoda explain. So see, there is no clear cut answer of any this particular, because this Anubhav is asking about this, how you have find out this market top in October last year. So see, there is a no clear cut answer of this particular question. It's all about continuous reading of market, lot of hard work, lot of efforts, continuous reading of lot of macro data, continuous reading of lot of fundamental data. And of course, after reading and studying and analyzing all data, all things, all hard work, I can say that your analysis also matters about market, that what your thinking also matters about market, that what is the probability of happening. Because see, trading in market is just all about a game of probability, nothing more than that. It's a pure game of probability. Market may go up. At that time I was expecting that it is a 70%, 80% chance that market will fall from here. Only 20% chances or probability was there that it may gain from here. So it is but that conviction of probability will come only after doing a lot of hard work and a lot of analysis, macro data, fundamental data, technical data, and then only you will start giving your opinion with so much confidence. And that is why I would say, if someone is really interested to build knowledge, so you have to track three things actually. One is macroeconomic data. Another is this fundamental data. Fundamental data, that does not mean that you have to track what is EPS and everything, but what is overall on sector basis. And then technical data, because no analysis, see, there are a lot of analysis in market. There is fundamental analysis, there is technical analysis, there is quantitative analysis. Lot of people have lot of grip on various, few people have grip on fundamental, few people have grip on technical, few people grip on quantitative. But let me make you very clear that no one is perfect in this market. Technical is not 100% perfect, fundamental is not 100% perfect, macro analysis is also not 100% perfect. But if you combine and so that will give conviction at least. So at that time my conviction, after considering all these factors, after considering global economic data, then technical, then fundamental, at that time my conviction was 80% conviction, that was that most probably my chances are that market will fall from here. Only 20% chances, and that is why I have given a level at that time also. Once market will cross this particular level, we will turn our opinion. Okay, so it is like that only. There is no rocket science, but yes, you have to keep consistent watch on market, consistent reading about market, then only it will help you to build such type of confidence.
Okay, so let us move on to the next question from Dharmesh. Lancer container. Sorry, we are not tracking this Lancer container, so we are going to skip that.
Yatisa, just start taking frontline stocks. Like someone is asking about Hindalco, Power Grid, and NTPC. Take all these three stocks in one stock, one go. Hindalco, Power Grid, and NTPC.
Okay, so exactly how I explained in Nifty Energy. So Nifty Energy, especially from May, mid of May, it has started given a downfall from May and June. So it is kind of given a kind of head and shoulder breakdown over here. So this is a head and these two shoulders. It has given a breakdown over here, and it has already almost touched its 200 DMA. Okay, so now currently it's trading in the sideways range. So this in the past also it has given a support over 200 DMA and given a bounce back. So uh, so currently 200 DMA will continue to act as support level. So fresh entry is it's better to avoid at this current level for power grid. Better not to take fresh entry in the power grid. So once it break below this 208 kind of level, once again it might test 190 kind of level, this level 180 190 kind of level, it might test that level. So it will continue to trade in sideways with the negative bias. Okay, so and one more power stock, energy stock was the NTPC. So this sector is also trading. There was sharp fall over here in the month of June, this month itself. So this also, if you observe the past last 6 months data, like it is continuously trading, given a bounce back from 200 DMA, here also 200 DMA, and currently it also once again it's testing this 200 DMA, and today I guess it has given a resistance from 100 DM. Okay, so it's this is also kind of like a do or die kind of situation. So if a trader who wants to take a position, he can go with the 136 kind of stop loss, 136 kind of stop loss, and ride this rally. But this is purely a bounce back. You may not expect a good risk reward ratio in this current market. Okay, so you might expect something around 150 kind of level. So it's kind of a 1:2 kind of risk reward ratio, but you have to hold for a little longer than the usual. Okay, so also if you see, the momentum has been decreased from compared to the here. So it's if someone wants to go here, so one can keep it in 136 stop loss and ride this rally. Okay, and there is one more stock, Hindalco, right? So similar to Nifty Metal Index, this is stock also, it's continuously, this is a one side rally from 640 to 300. It's kind of most of the rally has been this 50% downfall has happened. Let me check with weekly chart. So it has almost touched it's almost fell 6.618. Retracement is almost not exactly done. It is something placed around 300 level. So little more correction need to be done here. So the overall trend is negative. Better not to buy in this downfall. So better to avoid this stock for a fresh buy. So this is regarding Hindalco, and any
Can you set chart of Elecon?
Elecon. Okay.
So Elecon is trending around almost at multi-year high level, no doubt. But at the same time, trend is bullish on all time frame chart, except daily chart. Trend is bullish. Only daily chart is showing some kind of sideways trend. But longer time frame chart like weekly and monthly are showing clear cut bullish trend. But at the same time, I would not suggest anybody to buy at current level, because in this month only market has, if this stock has gained more than 30%. So I wouldn't, because risk reward is not in, would not be in favor. So I would not suggest anybody to buy this particular stock at current juncture. But yes, if someone is holding and sitting on very good profit, so one can hold this particular stock, or one can book at least 50% profit in this particular stock and remain invested for 50%, and one can wait for another after booking 50% profit. One can wait for correction in this stock to re-enter once again. But yes, trend is bullish, no doubt at all. But at the same time, I would not suggest anybody to buy at this level because risk reward is not in favor.
So let us take Reliance and ITC.
I am taking Reliance. Okay.
Okay.
Just so Reliance, meanwhile, it is trending around just about 200 DMA. Once again, it took support around 200 DMA, and further, further this slope of 200 DMA is also positive. So I can say that after this current fall, there is some bounce back in last two trading session, and even today also it was positive, flat to positive. So I would say one level, and that level is around 2450 level. Until it is holding 2450, so one can take entry in this. Actually, risk reward is in favor, almost 4-5% stop loss from here. So one can keep stop loss of 2450, and one can take entry at current level in Reliance. And suppose it will give bounce back, so then first target would be around 2800, and sustainable trading about 2800. Next target would be 3000 to 3050. So I can say that if someone is interested to buy Reliance, one can enter at current juncture with strict stop loss of below or around 2450. Please do not forget to keep stop loss of 2450 or plus minus 10 rupees around 2450.
Next one is ITC.
ITC. So we have already added in our TraderSmith recommendation list 2 days back. I think yesterday we have recommended this stock. Overall structure is bullish, trending above all key moving averages with higher top, higher bottom formation. So we are also looking some positive action in this particular stock, and that is why we have added. So it is looking attractive at current juncture at least. And if someone had bought this particular stock, so please follow our strategy after considering market condition. Whenever we advise to buy or sell or exit or book partial profit, please follow that. So looking attractive at current juncture.
Next one is Cipla.
Cipla, today only there is a big bearish candle formation, almost 3.5% below 200 days moving average. So maybe it may turn negative from here, but there is a lot of support and everything. So I would not suggest to buy anyone. Maybe it will remain traded in sideways in coming few days. Sideways with negative bias or may further fall from here. But there is a support area. One support area is placed around 880. So once it so currently it is placed around 900. Today's closing price is around 940, 950. But it may fall further from here, at least toward 880 kind of levels. And suppose it will take support around 880, some bounce back cannot be denied from that level 880. And suppose it will breach that level of 880, so main negativity will come in this particular stock. So 880 is it may fall at least. I can say meanwhile it may fall toward 880 in coming few days.
So let's move on to Cube Investment.
Yeah. Can you take this? Cube?
Yeah. Okay. So Cube Investment has been trading in sideways range. So this is a level where it has given a nice bounce back from last 4-5 days. It's continuously trading in positive zone. I hope if you bought somewhere around here, the risk reward ratio was favorable. So that is around. So this level it will continue to act as a support level. So this is previous low. This here also previous low. There was a clear cut, and today there is a trend line breakout also. So, but here the risk reward ratio, if you bought here, the risk reward ratio doesn't fall favorable here. So, I hope if you bought somewhere around here, continue this continuous stock with stop loss of some. We raise your stop loss to if you raise your stop loss to somewhere around 16,000, 1650, 1600 kind of level. So continue to trend this stock. So volume is also picking up. So there is some positivities traction in this Cube Investment. Okay, so this is regarding this, but fresh entry at this current juncture can be avoided. because of risk reward ratio is not in favor. And there was one more
Take
question.
Select Hotel.
Okay.
Select. So our subscriber, our viewer is clearly asking hold or exit. So I would suggest hold. Okay. And for further stop loss, 280 is a stop loss. And I would suggest to hold because it is trending, it is in clear cut bullish trend, trending above all averages. From the last 2-3 months, it is in sideways, of course, and but showing some positivity. And most probably now from here, it is showing positivity only. So I would suggest just keep remain investing in this particular stock. Maybe this particular stock may move further from here toward 350 kind of levels in coming few days and weeks. Hold from my side, and downside stop loss is placed around 300, 280.
Okay. Next one is PSP project.
PSP, and then let's take this HDFC Twins and ACC, and then we will wrap up this session.
Okay. So PSP project, let me take with. So weekly chart is trading in a sideways range. So large concern from last 2018, it is trading in sideways only. And if you go to the daily chart, I think, yeah, recently we have given, I guess, somewhere on social media or in chart of the day, we have shared this chart 2 days back only. It has given a trend line breakout over here, somewhere around 540 levels. So it's trading in that range. Today it almost does 580, 575 levels, and this will be continue to act as 470. This horizontal line. So somewhere around 460, 475 will be the continue to act as support level. So if you somewhere around if someone's risk reward ratio is setting up very well, one can hold this stock with the risk favorable risk reward. So one can, if someone bought it somewhere around 540 level, 550 level, one can ride this stock with the target of somewhere around 150. 150 kind of level. So somewhere around 650, 675 kind of level, one can target can be expected in PSP project. So subject to market risk, this will be continued as act as support level. So one can keep as 470 kind of level for stop loss. Next one is SDFC, right?
I am taking HDFC.
Okay.
So let's start with HDFC Bank. So see, one thing, if someone is looking for, if someone is really looking for long-term perspective now, so this one can utilize this correction for long-term accumulation of this twin stock, SDFC Limited and SDFC Bank, for longer-term perspectives. So I am going to discuss meanwhile from longer-term perspective only. And I would suggest if someone is looking to accumulate this stock from longer-term perspective, so one can deploy at least 50% money at current juncture, because now there is a very good almost 20-25% correction happened in this both stock, and both stock have very good business model, pedigree management and everything, and technically is also not that much bad actually. So I can say that if someone is looking from long term perspective, so one can 40-50% or 1/3 money of total whatever amount someone is interested to invest in this particular stock, one can invest in this current juncture. I'm not saying it may not fall further from here. It may fall further from here. Some more connections may happen, but both companies are very good company, and someone is looking for long-term buy. So this is the good time to start accumulating. Maybe in next 6 months or next 6 to 9 months, maybe two to 3 quarters, it will turn out positive, and then it will, if someone has bought this both stock in bottom fishing manner, so it will going to give benefit of that bottom fishing investment. But yes, I would suggest just if someone is interested to buy, so buy it in staggered manner only, not buy in stock in limited quantity only. But at the same time, if I say about certain point of view, the both stock are trending in sideways only. There is no sign of negativity or positivity. Of course, if I talk about next 6 month perspective, so it will remain traded in sideways with negative bias. From short term perspective, if for trading perspective, I would suggest to ignore this stock. But if someone is looking for long-term perspective, so one can follow buy on dip strategy in both company, SDFC Limited and SDFC Bank. and follow buy on dip strategy in staggered manner for long-term portfolio investment. Now let's take ACC, Atisa.
HDFC, right?
ACC.
ACC.
So ACC actually in cement last to last month, if you are aware, there was a declare or there was a announcement from this Ultratech that they are going to increase the capacity, and now so after that there was a huge sell off happened in across the all cement sectors because of stiff competition going to this sector is going to face stiff competition, and another is slowdown in this infrastructure spending because of current inflationary situation and everything. So this sector is not looking, meanwhile it is not looking attractive, so I would suggest please wait and watch. I would not suggest anybody to buy at current juncture. I would say wait for at least another 3 to 6 months to take fresh entry from longer term perspective. If I talk about a technical point of view, or if I talk about short term perspective, so stock is trending below key moving average, that is 200 days exponential moving average. Momentum is also deteriorating on weekly and monthly chart. So I would say some bounce back cannot be denied toward 200 DMA, or bounce back may happen toward 2200 kind of level. Currently it is placed around 2125. So 50, 50 rupees, 70 rupees, 80 rupees bounce back can be happen. But yes, overall structure is negative. And from long term perspective, I would suggest to avoid if someone is interested to buy. So I would suggest do not buy at current juncture from short term point of view only. If someone is interested to buy stock from short term perspective or want to trade from short term perspective, someone can focus on leading quadrant stock, that is stocks belongs to auto sector, stocks which are trading about 200 moving averages, stocks which are showing very good relative strength, stocks which are showing very good resilience in this current downfall market, stocks which are showing momentum, strong momentum. So one can focus on such type of stocks. Do not focus cement stocks, because still there is some negativity in this particular space and sector both. Let's take last question, then we will wrap up session. This last question,
Okay.
and take it from front line only.
Yeah, front line.
Is there any frontline stock?
No.
Otherwise, let's take. No, it is not there actually. So let's take last question, Mirza International, and we will wrap up this session. Mirza International. So if I talk about Mirza International, so see, it is trending in bullish trend. Still, it is trending in bullish trend. Its formation is still higher top, higher bottom formation, trending above all key moving averages. But at the same time, I would not, after considering current market condition, actually only not because of stock, because of current market condition, I would not suggest to take fresh entry in this particular stock. I'm not saying it will not gain further from here. It may gain further from here. It may retest once again 250 kind of levels in next month or next to next month. But after considering risk reward and current pattern and everything, I would not suggest anybody to buy, because stop loss is far from here. Otherwise, trend is bullish. Okay. So I think we have answered almost all questions, and it is almost 5:50. So we are happy. Let's wrap up this session here. So thanks for joining this session, and stay connected to us for in next Bazar Pe Charcha, and we will try to update you in between via various weekly reports and monthly reports. Thanks for joining this session. Thank you all.
Thank you. Thank you. Okay.